Okay, guys, so we didn't get a rate hike, but we may have gotten a tariff one. Joining me is Matt Cheslock from Virtu Financial. Hello, Matt. Thanks for coming on board today.
Anytime, Boz, anytime.
All right, so let's see. Trade tensions are escalating. We also got this proposed defense bill that hunkers down on corporate exports and controls. So what stocks are the ammo for that sort of defense?
Well, I think this market right now is very fragile, and we're trading on all kinds of headlines, and it's starting to get a little numbing, I think, from the investor standpoint when we're reacting to these news headlines every single day. But when you start talking about defensive names, what that does, that brings up a lot of defensive posture in your portfolio as a whole. So you're not going to be wanting to buy these high-profile names. What you're trying to do is try to insulate your portfolio from some of these macro events that are occurring. So it's going to be a much broader picture. You might start to see, some of the sectors, that have been beaten down, maybe that provide a nice yield, maybe a gold. You might start to see that as you start talking about defense and tariffs. And if this starts to escalate, those will be a bigger presence in your portfolio.
I was going to ask you because you bring up gold, and that did form a bullish falling wedge. And I was wondering if you see any instance for that triggering.
Eventually, I think that people are going to realize that gold needs to be a part of their portfolio. At least historically, that's how it's been. So if you start to get a technical move on gold as well, that would be a good time. So as you get a massive portfolio change, maybe they say, you know what, we're going to get a little more defensive in that. You could see gold just, gain a little luster, if you will.
And some shiny insight from Matt Cheslock. Just got word that Apple did touch $1 trillion market cap, but in July, we'll see if it closes there, we'll see if it holds, but in July, investors were rolling out of growth stocks and into value stocks. So you agree with this logic?
Yeah, growth is going to be probably be reevaluated. If some of the tech names aren't going to be making 30 to 40% a quarter, is 20% good enough? Apple's been able to readjust that balance. So instead of making 25, 30, 40%, if they can make 10 to 15%, that's growth for Apple. And so I think that's what the investor has to realize is that these growth patterns are unsustainable. And there could be quarters where there are a little bit of hiccups, but you have to, realize that, these are, again, cutting edge companies. And if they're doing it right and they're readjusting their company, look at a company like Amazon now, they are no longer just a shipping company. They are so many other things, and they've done it well, but it's not going to be smooth all the time. So you have to be able to take those bumps in the road with the understanding that, 15% is still a growth stock. It's not just value.